Is Polkadot dead, or is this the single most irrational mispricing in the entire crypto market right now? We are staring at a $3.3 billion market cap protocol that has more active developers than Cardano and BNB combined, yet the price is bleeding out around $1.90. Most people are looking at the chart and running for the exit, but when you look at the on-chain reality, specifically a major shift in tokenomics that just got approved to slash inflation, the story changes completely. However, if we lose the $1.80 level on a weekly close, none of that fundamental value matters. Today, I'm going to show you exactly why my stop loss is tighter than ever, but why I'm still adding to my bag one last time in this zone. Let's be honest with each other. Holding Polkadot has been painful. If you've been following this channel, you know I have covered DOT over 10 times. I started accumulating around $4, and I have been dollar cost averaging down. I'm definitely not happy about it. Frankly, the price action has been garbage. We are sitting right now at $1.90, literally fighting at all-time lows. Sentiment is in the gutter. You go on X, and everyone is calling it a ghost chain. But here's the thing about position trading on high timeframes. You do not buy when it feels good. You buy when the capitulation is so thick you can taste it. We are currently testing a support zone that, if broken, sends us into price discovery to the downside. Yeah, even more. But if it holds, the risk-to-reward ratio here is unlike anything else in the top 50. There is a disconnect happening right now. The price is screaming bankruptcy, but the protocol is shipping upgrades that fundamentally change the investment thesis. Before we look at the charts and where I'm putting my hard stop, we need to understand the catalyst that might actually save us. The biggest criticism of Polkadot for years has been its high inflation. It was diluting holders to pay staking providers. That narrative is officially dead. A new referendum has been approved to halve the annual issuance. We are going from huge inflation down to a much tighter model. Look at this data. The staking rate is going to decrease from roughly 14% down to 5.6%. On March 14th, 2026, annual issuance gets cut in half, from 120 million DOT down to 55 million. And it keeps decreasing by 26% every 2 years until we hit a hard cap of 2.1 billion in 2160. This turns DOT from an inflationary token into a scarce resource. While the tokenomics are getting fixed, the friction is disappearing. Coinbase just enabled direct USDC deposits and withdrawals on Polkadot. This sounds boring, but it is critical infrastructure. Previously, getting stablecoins in and out was a headache for institutions. Now, you can send USDC to anyone on Polkadot in seconds for pennies. And speaking of institutions, Polkadot has been quietly included in the Bitwise 10 crypto ETF. It is a small allocation, sure, 0.14%, but it is there. It is being bundled into institutional products alongside Ethereum and Solana. But the real stuff is the developer activity. According to the ChainSpect report, Polkadot ranks number 2 in active builders, with almost 9,000 developers. Compare that to the market cap. Ethereum has a $45 million market cap per developer. Polkadot, $370,000 per developer. That is a 120x valuation gap. We are buying the brain capital of the industry for pennies on the dollar. The team even launched a new website to humanize this complex tech, focusing on products rather than just protocol code. The foundation is being laid, but now we have to ask the charts if the market actually cares. Let's strip away the emotion and look at the raw data on the 2-week timeframe. The trend is undeniably bearish. We are trading below the 10, 21, 55, and 100 exponential moving averages. Those blue, purple, and yellow lines are all acting as dynamic resistance overhead. Until we reclaim at least the 10 EMA, the momentum is strictly to the downside. I'm watching 3 specific descending trend lines. The first one comes from the all-time high way back in October 2021. We got rejected by it again in December 2024. That is the long-term beast we need to slay. But zoom in closer. We had a local top in December 2024 at $11.60. We formed a trend line, broke it to the upside in August, but, and this is the frustrating part, we got rejected exactly at the 236 Fibonacci level around $4.15. Now, price has curled back down, and we are retesting that broken trend line from the backside. Technically, this is a retest of support, but it is happening much lower than I would like. There is a glimmer of hope on the Heikinashi RSI. We are deeply oversold. I have drawn two orange-dashed trend lines on the indicator. Look at the white circle from October 2023. When we broke that RSI trend line to the upside, price rallied 200%. Right now, as you can see, we are coiled tight below a similar trend line. We are waiting for that snap. If the Heikinashi RSI breaks up, it usually precedes the price action. On the volume profile, our point of control is way up at $4.15. That is where the most volume was traded. If we can find a bottom here, that level acts as a magnet. It pulls price back to equilibrium. So, what am I doing with my capital? I'm treating this zone between $1.90 and $2.70 as my final accumulation area. I'm a position trader. I buy low and sell high on high timeframes. This is historically low. However, I'm not blind to the risk. My stop loss is hard set at $1.80. This is a crucial level. It is just below the original launch price on Binance in 2021. If we get a weekly candle close below $1.80, my thesis is invalidated. It would mean the market has rejected the project entirely for this cycle. I'll take the loss and rotate that capital. I'm not catching a falling knife all the way to $1. If this level holds, my targets are systematic. I'm looking to trim heavily at $4 and $6 to get my initial principal out. Those are my safety valves. If we clear those, I'll let the rest ride to $11, $17, and potentially $27. I'll use a trailing stop. If we hit target 1, my stop loss moves to my entry. If we hit target 2, my stop moves to target 1. We lock in profits. We do not give them back to the market. Here is the game plan summarized. The downside risk is roughly 5 to 10% from here to my stop loss. The upside potential to the first major resistance is over 100%. To the point of control, it is a 2x. To the previous local high, it is a 5x. The fundamentals, the halving of supply, the massive dev activity, the institutional ETF access, they all say this is undervalued. But the chart says the market is scared. I'm betting on the fundamentals winning out, but I'm protecting my downside with a strict exit plan at $1.80. This is an asymmetric bet, but do not mistake it for a safe one. Polkadot is in the fight of its life right now. The technology is miles ahead of the price action, but in crypto, the market can stay irrational longer than you can stay solvent, which is why that stop loss is non-negotiable, and why I'm not touching leverage, only spot positions. If you appreciate me showing you exactly where I'm wrong and not just hyping up a coin because I hold it, hit that like button and subscribe to the channel. I'm posting daily updates on these setups in my free Telegram community. The link is in the pinned comment. Besides Polkadot, I also covered Near Protocol recently, which is showing a similar structure. So check that video out right here on the screen if you want to see another high-risk, high-reward setup. Thank you so much for watching till the end. It means a lot for me. Remember, never financial advice, and I'll see you soon in the next one.